Breaking news! NIO stock will be the number one in electric cars. Well. On October 25th, NIO, a Chinese electric vehicle manufacturer, announced its fourth quarter results. Despite the varied results, investors were mostly concerned by lower than expected delivery forecasts. After the market closed that day, NIO shares fell by 9%. Hello and welcome back to Stock Market News, everyone. Today, we'll discuss what's going on in the stock market, namely with the NIO stock. So go ahead and watch this entire video because this is where you'll get your daily dose of NIO stocks. But before that, please hit the bell icon and subscribe to the channel to get every single update about the channel. At the beginning of the smart electric vehicle startup in China, NIO introduced a luxury midsize sport utility vehicle that is capable of traveling up to 650 kilometers on a single charge. With this introduction, NIO is challenging traditional marques in the world's largest automobile markets, such as BMW and Audi. The ES7, a spacious 5-seat SUV that is based on the company's new NT 2.0 platform, will be delivered to consumers in late August. It is hoped that by this time, the broken automotive supply chains that were caused by the COVID-19 pandemic curbs will be entirely repaired. William Li, co-founder and chief executive officer of NIO, stated in an online launch event on Wednesday that the ES7 will prove to be a glass ceiling for any other electric or conventional internal combustion engine car maker to break into the luxury SUV segment. Mr. Li also stated that the company was well prepared to deliver vehicles to customers in a timely manner. NIO's sixth production model, the ES7, will be offered for sale at a price ranging from 468,000 yuan, or about $69,697. Pano Cinema, a panoramic and immersive digital cockpit featuring augmented reality and virtual reality technologies, or AR and VR tech, will be installed in it along with Atom, NIO's supercomputing platform. Buyers will be able to make a savings of 70,000 yuan off of the purchase price if they choose to go with the battery renting approach, which entails paying a fee of 980 yuan each month. In the mainland Chinese market, NIO, Xpeng of Guangzhou, and Li Auto of Beijing are all considered to be Chinese competitors to Tesla, the unquestioned global leader in electric vehicles. Tesla is headquartered in Beijing. Tesla's Model 3 and Model Y vehicles, which are assembled in Shanghai, are primarily aimed at customers from the middle class on the mainland. In contrast, the company's high-end Model S and Model X vehicles, which are manufactured in the United States, have not yet gained a foothold with Chinese drivers. According to Chen Jinzhu, chief executive of Shanghai Mingliang Auto Service, a consultancy firm, luxury electric-powered SUVs are poised to strike a chord with some high-net-worth Chinese EV devotees. When it comes to wooing wealthy drivers, Chinese smart EV startups think that impending premium models would help them gain an advantage against Tesla. In order to compete with the BMW X5 and the Audi Q5, Li Auto wants to begin delivering its L9 SUV in the month of August. The price range for the L9 is between 450,000 and 500,000 yuan. Prices for the Q5 range anywhere from 400,000 to 500,000 yuan, while the X5 begins at a starting price of 605,000 yuan. The latest model from Li Auto, which features an increased battery range, is capable of traveling up to 1,315 kilometers on a single charge. In a research note published on Tuesday, an analyst at Deutsche Bank named Edison Yu stated that China's high-end midsize SUV market, which is now dominated by brands such as BMW, Audi, and Mercedes-Benz, has the potential to generate annual sales of more than 200,000 units. The lockdowns that occurred between March and May in Shanghai, often known as China's Motown, and the northeastern province of Jilin, which is a key car-making base, affected all of China's smart EV manufacturers. The limits imposed in response to COVID-19 caused serious disruptions in supply chains and temporary stops in production at assemblies. Midway through April, NIO called a temporary halt to production at its facility in Hefei, which is located in the eastern part of the province of Anhui, for a period of 5 days due to the fact that the lockdowns in Shanghai and Jilin province clogged up its automotive supply chain. NIO reported that its net loss for the 3 months ending on March 31st had decreased by 16.1% from the previous quarter to 1.83 billion yuan. According to a study conducted by a Shanghai-based financial media site called Jimian, the performance was above the average analyst forecast, which predicted a net loss of 2.23 billion yuan. NIO has started production of its second factory as it competes to move ahead of competitors that are experiencing increasing difficulties due to a bottleneck in the supply chain. The automaker, headquartered in Shanghai, announced in a filing to the Hong Kong Stock Exchange on Monday evening that the 50 billion yuan or $7.6 billion NIO park, based in Hefei, the capital of East China's Anhui province, had started sample production of the ET5, its most recent model. The ET5 is scheduled to make its debut on the Chinese mainland market in September. NIO's midsize sedan, which comes equipped with a 75 kilowatt per hour battery and has a range of up to 550 kilometers on a single charge, is seen as a competitor to Tesla's Model 3 and carries the company's hopes for gaining a significant market share in the premium electric vehicle segment on the mainland. Trial operations have begun at the NIO Park, which was co-developed by NIO and the government of the municipal government of Hefei. This comes less than 3 weeks after the automaker temporarily halted production at its first factory for 5 days due to lockdowns in Shanghai and the province of Jilin in northeast China. NIO, XPeng, and Li Auto are the first 3 Chinese smart EV startups that have the ability to challenge Tesla's supremacy in the world's largest automotive and electric car market. NIO's based in Beijing, XPeng's headquartered in Guangzhou, and Li Auto's based in Beijing. In April, NIO supplied 5,074 vehicles, which is the lowest amount since November of the previous year and is half the amount delivered in March. Because of the disruptions in its supply chain caused by the COVID-19 lockdowns in Shanghai, Jiangsu, and Jilin, the company was forced to suspend assembly at the JAC NIO plant from April 9th to April 13th. As a result of a disruption to that supply chain, the Tesla Gigafactory 3 in Shanghai was unable to produce about 50,000 fewer units between March 28th and April 18th. Despite the fact that Li has stated multiple times that NIO will not raise the prices of any of its existing models at this time, the situation is actually quite complicated. Although NIO does not currently have any intentions to raise prices, the company does intend to develop plans for product improvements during the course of this year and will explore product pricing strategies based on the price of raw materials, as he explained. The upgrading of the smart cockpit is the product improvement plan that Li was referring to when he made his comment, and it is something that NIO has stated to users numerous times in the past. According to him, NIO's 2022 ES8, ES6, and EC6 will all receive considerable upgrades in the form of the 8155 chip and a 5G communications module, in addition to various other optimization enhancements. Furthermore, costs will be modified in a reasonable manner. NIO will also provide post-installation upgrades for the aforementioned hardware to existing clients, according to Li. NIO also began offering standard-range batteries using lithium iron phosphate chemistry last year, according to Li, which has helped raise vehicle gross margins due to cost advantages. The company's expanded sales also helped to spread costs, but rising power cell and material prices had a negative impact on gross profit, he said, adding that NIO's gross margin target for the entire year remained at 18 to 20%, even after accounting for raw material price increases. Li was also asked about his thoughts on the ongoing surge in lithium carbonate costs. He believes that the continuous rise in pricing is not primarily due to capacity and supply difficulties, but rather to speculative considerations. He urged upstream manufacturers to avoid speculative pricing rises, which are bad for the sector as a whole. So, that's it for this video. To get more stock news, simply like this video and subscribe to the channel so you never miss any updates. And if you have any suggestions on which stock to discuss in future videos, please let us know in the comments below. Thanks for watching, and we'll see you in the next one.